Hi, it's Alice. I am back with a market update for the Victoria real estate market for March 2019. So March is done. We are into April and it was not a crazy month as far as differences in sales go versus last year, but we'll just go through the numbers quickly for those of you who are watching the Victoria real estate numbers, and you know, maybe you've seen them, maybe you haven't, but let's just check them out. Okay, so unconditional sales are down 7% March 2019 versus 2018. So there were 640 sales. See, I'm looking at my notes. I was looking at my notes. And last year there were 688 sales that completed by the end of March. So it's honestly really close to last year, and this is kind of normal. Spring is busy, you know, as far as real estate. I'll move my Bob Ross, I'm gonna knock him over. Spring is busy for real estate, right? We all know this. Spring and summer are kind of the busy seasons, so it's not surprising that the sales for March were pretty decent, pretty strong for, you know, just comparing them from last year. Listings were up just a little bit. So there were 1,284 new listings that came to market just this past March. And last year there were 1,188 listings, so you can see those are pretty close together, and nothing too crazy that is surprising to me. Now the big one that we've been watching for months and months and months, and it's been consistently higher, although it dipped a little bit lower in the winter months, was the listings that are sitting on the market. So they are up roughly 38%. It's like 37.9%, something like that. That's probably exactly that number. But yeah, they're up about 38%, and so that's 2,435 listings sitting on the market as of the end of March, versus last year was 1,766 listings sitting on the market. So you can see that that number consistently, you know, every time that I do an update, it's consistently higher than it used to be. It used to be very low. So there are a lot of things that you can choose from as far as if you're looking for a property, you know, you're not having to compete as much. The only thing that I'm finding in Victoria is that if you're looking for lower price properties, which this is consistently, I keep saying this, the lower price properties are more competitive. The biggest thing I see is condos in the Vic West area. If they're, you know, 1 or 2 bedroom condo and they're under that 500,000 range, they are very competitive. And I've had buyers that have been looking in that area and trying to get condos in that area in specifics, you know, like Tyee kind of area, and they tend to get offers in the first day still. So it really depends. I've bought houses with people that, you know, the house was on the market for 2-3 months, and that seems pretty normal as well. So it really depends when you're looking at the market, what kind of property it is and what area it's in. If it's in a really desirable area and it's priced sharply, then it does sell pretty quick, but it's common to see property sitting for, you know, months now and having to cancel and relist. This is kind of becoming the norm. You know, and when I do these real estate updates, although I've been kind of behind lately, I'm getting to it. Like, here I am, I'm sitting here, I'm doing it, like I'm here, so it's good. We'll just take what we can get. So anyways, if you look at the market in a week-to-week kind of thing, or you're watching really closely and you're kind of in the micro of things, you know, it doesn't seem to be shifting all that much. But if you're looking at the macro picture, then, you know, versus 2 years ago, it's a hell of a lot slower. You know, there are roughly just over 1,300 realtors in the Victoria area, and I know that people in general are kind of slow. There are top selling agents that are always, you know, busy and, you know, they like to talk it up, but the ones that are pretty honest are, you know, just the average real estate agent. They're not quite as feverishly busy as they were 2 years ago. So that's kind of the direction that the market is going in, and we all kind of know this. I know you people out in YouTube land kind of are keeping your finger on the pulse as far as what's going on in the market, and yeah, it's kind of going in that consistent direction that we are all expecting it to. So there's that. The benchmark home price, HPI, has gone down a little bit. So the average home in Victoria, they're saying the benchmark price is $843,600. So that is down 2.8% versus last year in March. The average home price was $867,900. So close, but it's slowly, it's shifting downwards. And for me, that's kind of, you know, I know the sales have been lower over the past year, but we haven't seen the prices take a dip. So this is kind of interesting. It's, you know, barely 3%, but it's interesting to see it tip to the other side. So we'll see what happens next month, but that's where it's at right now. Condo prices are still higher than last year. The average condo price, I'm going to give you the specific numbers for all my local people. The benchmark condo price in Victoria, like core area, is $506,500 versus last year in March it was $501,500, so it's up just slightly. And that is namely because condos are still busy, they're lower priced. First-time buyers are having a hell of a time getting into homes. You know, if they're average Canadians and they have normal, still decent paying jobs, but they're not well off, you know, a condo is kind of where people are ending up now. And I'm seeing more and more people raise, you know, a one-child family in a condo, or sometimes 2 kids, but, you know, it's tough. I understand that you kind of need space when you're a family, but so those are the home prices. We'll have to see what happens. I know there's a lot of bubble watchers out there, and unfortunately it seems like Vancouver is like, whoa, what's going on, right? It's kind of gone crazy there, and I know people are saying, oh, prices have dropped up to 50%. A lot of places have dropped 40%. It really depends on the area of Vancouver, but it sounds like in the comment sections on a lot of these videos talking about it that people are still waiting for them to go even farther. So at the moment, to me, in general, as a snapshot of what's going on, it feels like buyers are even more tight with their money and more skeptical of listing prices right now than I have seen ever before. And it doesn't help that the prices seem to be coming down, like the benchmark HPI of the Victoria homes coming down 3%. Like, we'll see what happens next month, who knows, but I'm just noticing that people are really watching their pennies, and if I go on showings with people, they are very critical of the house that they're looking at. Like, if it's not tickety-boo and, you know, it has just dirty baseboards or, you know, scuffs on the walls, things like that, people are really critical, because if you're pricing, you know, at least a seller, if they're pricing with kind of like last year's pricing in mind and they haven't come to terms with, you know, you need to be more competitive with your pricing. If you're pricing at top dollar, you can't present your home with little dirty sections here or there, unkempt things, or, you know, you have to mow your lawn, you need to polish those, you know, faucets. You need to make sure everything is perfect, because if you're going to ask top dollar, people, as far as I can see, they're a lot less forgiving of those kind of things when they're looking at homes. So unless you're giving it away at a good deal, or, you know, you're pricing aggressively, it's just know that if you are listing, make sure that you do not try to skimp on anything and put in the elbow grease, because people are noticing and they're being very critical of those things. So anyways, that is what I am seeing locally. The mortgage stress test, yeah, it is affecting some of the younger buyers that I am working with. They are having trouble getting into the market, and I've known a few people that basically have given up their search and just they're going to hold out. So a lot of people are wondering if that stress test has had an effect, and of course it has. It still continues to. That's that. Hopefully, I know I haven't done a video in a while. I should have been, yeah, whatever. The speculation tax and the vacancy tax, hopefully you guys, if you are homeowners, you did go and declare that you are not a foreign owner. I did that as soon as I got mine in the mail. It took me 2 minutes, and, you know, the deadline was March 31st, so hopefully you did it. If you didn't, I believe that they may charge you and then you can get the money back. I don't know the process yet. I don't want to quote anything, but hopefully you did it at the right time and you got it done, so you don't have to worry about it. The other thing that I've had people emailing me about is the new program from CMHC, the CMHC Shared Equity Program, I believe it's called. So this is interesting. I am still waiting for more details. Obviously, it's not fully outlined yet and it's not in effect yet. And it's, you know, probably going to be fall before we kind of get into that, but it's for people who make less than $120,000. I believe under 480,000. Let me just check my notes. I don't want to say anything wrong. Yeah, it's for properties under 480,000, and the government will provide up to 10% of the down payment for basically a share in the property. I don't know what happens when you sell, if it's greatly appreciated. I'm assuming that you just pay out what they loaned you and then you get to keep the rest. Or if the property takes a dive, I believe that when you sell, you still have to pay them out first. It's an interesting program. I recognize that it helps people get lower payments, and I think that's nice. My only concern with it is that people may jump into something that's still too expensive for them, and then you're taking on a lot of debt. And I just, you know, I'm always for first-time buyers buying really frugally and basically taking on as little debt as possible. And you know, if this program helps people get into expensive condos or what have you, I still feel like the market is kind of tough territory to navigate. Like if it's going to go down a lot or if it's going to fluctuate, I still think that just because there's a program that the government will help you out with payments, I still think approach with caution and make sure you're ready to buy a property and that you can handle if it takes a dip, that you can ride out those storms financially. So it's a great program if you're one of those buyers that is like really primed and you've got a great job going or a great career. But if you are one of those people struggling to get in the market and this might just give you the boost you need, just make sure that you're not overbuying, because, you know, it's tough if you're starting out and you don't have that cushion financially. Which brings me to my last note, that the debt service ratios in Canada are still crazy, and they're up like the highest levels that they've been since 2007. So seems like everybody is in debt. The debt service ratio is like 14.8%, I believe. So I guess I'll just end the video with, you know, I'm seeing more and more boomers that are taking reverse mortgages to help cover their debt payments and to help fund their retirement. You know, a lot of boomers are cash poor and home rich, and you know, at least they have that going for them. But I guess my point is, I think what is really noticeable to me looking at just the society in general, North America in particular, is that everybody is really still living this kind of lavish lifestyle, and I'm not seeing people scaling back. And it is very reminiscent of 2007, 2006, when it was kind of a boom, right? And people are just spending like crazy. People that I know in my neighborhoods and, you know, all that, it's kind of like money is no object to a lot of people, and that's great when times are good. But when people are going into debt at this kind of moment of kind of indecision, like where is it going? We don't know. We don't, like, I assume that we're in a bubble, as I'm thinking most of you do too, but I just think right now, if I could give you one piece of advice that's not real estate related, is if you are in debt, do anything that you can to pay it down. There's nothing wrong with being frugal. There's nothing wrong with going without a vacation or fancy clothes or what have you. Like, now is the time to explore how to be frugal and how to make your money really go far for you and to really stretch a dollar. Because that was kind of an old-fashioned skill that I find my grandparents really had. Not so much boomers, some do, some don't. But I think that a lot of people are going to learn the lesson the hard way. But, you know, if you're out there listening and you do have debt, make it a priority. Just cut out the luxuries and just, you know, get yourself in financial shape so that you can handle whatever is coming. And I think we kind of have an idea. So if you think that things are not going to be good in the next 5 years maybe, or we're gonna weather a storm, get yourself ready and just be really responsible financially, and don't do anything stupid. Don't go into any more debt, and stop going out for dinner so much, stop spending so much money, and just save. Saving's great. I mean, honestly, like, you know, I'm kind of a saving nerd and I love being cheap, but you know, if you're not used to it, just take small steps, and I think that you'll be really happy that you did. But anyways, that is my first update in like three months. I'm gonna say 3 months. So anyways, I hope that's helpful to anyone out there. I will be back with an update at the end of April, and I might do some videos in between. Honestly, I think I got burned out by doing weekly updates because it's just like, it's so micro, like it's so, just looking at the numbers every week. And I feel like there are so many amazing YouTubers out there that like Formafist and Mike Martins and Steve Zaretsky is so great, and they're really consistent at posting, and I feel like I don't want to be redundant for that kind of stuff. I just want to keep people in the loop, and any other videos I might do. I was thinking about doing some videos on how to do renos that make sense to buyers, because a lot of people who have bought houses and are trying to flip them or whatever, you know, sell them quickly after buying them and fixing them up, I'm seeing a lot of slap and dash kind of stuff, and people putting money in the wrong places when they're doing renos, places that don't count, and kind of confuse buyers. So I'm thinking about doing some videos like that, so stay tuned for that kind of stuff. And anyways, I hope this was helpful, and if you like my videos, you can subscribe, or if you are a buyer or seller in Victoria and you want some help, you can always contact me, or if you have any questions, you can always email me as well at alice@aliceklug.com. So that's all for today, and have a great week and great weekend. I'm going dirt biking and doing an open house, so it's gonna be awesome. Have a good one. Bye-bye. One last thing I forgot to mention was that I had a follower reach out to me. Her name's Sandy L. We'll call her Sandy L. Like, I don't want to say her name wrong, but she forwarded me an article that she wrote on money laundering in Vancouver and its effect on the real estate market. And I think you would be familiar with this because this is money that has basically been from fentanyl, as far as I can tell, and it's kind of destroyed our economy in BC. So if you want to check out her article, I am linking it below, and also she sent me a petition, so if you read that article and you agree with what she says, you might want to check out the petition as well and help her out with that. So it is all down below, and if you want to get in touch with Sandy, I can ask her if I can share her email as well, and you can chat with her. All right, sorry if I'm looking in the wrong direction. I got a new phone and I feel like I'm looking, I don't know. I don't know where I should be looking. Anyways, take care, and we'll talk later. Bye.